Your money doesn't exist. Not in the way you think it does. Right now, at this exact moment, if you walked into your bank and asked for every dollar in your account, in cash, they couldn't give it to you. Not because they don't want to, because it's not there. It never was. And they're counting on you never finding out. This isn't theory. This isn't speculation. This is the foundation of modern banking. And it's built on a lie so old, so accepted, so normalized, that questioning it makes you sound crazy. But here's the thing about lies. They only work until everyone asks for the truth at the same time. Let me show you something that happened 3 months ago. A regional bank in the Midwest. Mid-size, nothing special. A customer walks in and asks to withdraw $75,000 in cash. Their money, their account, legal request. The teller goes pale, makes a phone call. The manager appears sweating. He explains they need 24 hours notice for that amount. The customer asks why. The manager says it's policy. The customer asks where the money is if it's not here. The manager doesn't answer because he can't. Because the truth would cause panic. The truth is your bank keeps about 3% of deposits on hand. 3%. If you have $100,000 in your account, there's roughly $3,000 of actual cash backing it. The rest, it's numbers on a screen. Promises, loans to other people, investments in bonds that might mature in 30 years, bets on derivatives you've never heard of. And this isn't illegal. This is called fractional reserve banking. And it's how every bank in America operates. But what happens when everyone realizes this at the same time? What happens when 3% isn't enough? What happens when trust, the only thing holding this system together, evaporates? You get a bank run. And bank runs don't just destroy banks, they destroy civilizations. Let's go back to a time when banks actually kept your gold, when a deposit meant something physical, tangible, real. In 1609, Amsterdam created the first true central bank, the Wisselbank. Merchants from across Europe would deposit their gold and silver coins, therefore in return, they received paper receipts. These receipts could be traded, transferred, used as money, but everyone understood the deal. The gold was in the vault. One receipt equaled one coin. Always. For decades, this system worked perfectly. The Wisselbank became the most trusted financial institution in the world. Amsterdam became the richest city on earth because trust backed by gold, is the foundation of prosperity. But then something changed. The bank directors noticed something interesting. Most people never came back for their gold. They just traded the receipts. So the directors had an idea. A brilliant, terrible idea. What if we lent out some of this gold just a little? The owners will never know. We'll make interest on money that's just sitting there. And when someone does want their gold back, we'll have plenty. So they started lending 10% of deposits, then 20, then 50, and nothing bad happened. In fact, the economy boomed. More loans meant more business. More business meant more deposits. More deposits meant more lending. It was a perfect cycle until it wasn't. In 1721, the South Sea Company collapsed. Panic swept through Europe. Investors rushed to banks across the continent, demanding their gold, and Amsterdam's Wisselbank, the most trusted institution in the world, couldn't pay because the gold wasn't there. It had been lent to merchants who couldn't pay it back, to governments that had spent it on wars, to speculators who had gambled it away. The bank tried to hide it. They paid out what they could. They stalled. They made excuses. But the mathematics were brutal. When you promise 100 people they can have their gold back, but you only have 30 bars in the vault, someone's getting nothing. The Wisselbank survived, barely, but its reputation never recovered. And the lesson everyone learned wasn't don't lend out deposits. It was don't get caught. Fast forward to 1860, and then Overend, Gurney and Company, one of the largest banks in the world, collapsed in a single day. Why? Because they had lent out nearly everything. And when just one major borrower defaulted, the dominoes fell. Panic erupted. Crowds mobbed every bank in London. Not just Overend's customers. Everyone. Because if one bank could be lying about their reserves, all of them could be, and the Bank of England had to intervene. They printed money, lots of it. They lent it to failing banks at almost no interest. They promised to back any institution that was solvent. And slowly, very slowly, the panic subsided. But here's what nobody talks about. The Bank of England didn't save those banks because they cared about depositors. They saved them because if the banking system collapsed, the empire collapsed. Power requires money. Money requires trust. Trust requires the illusion of safety. And illusions must be maintained at any cost. Jump to 1933, America, the Great Depression, and the mother of all bank runs. Between 1930 and 1933, over 9,000 banks failed. 9,000, not because they were poorly managed, not because they were corrupt, because they were honest about what banking actually is. A confidence game. People would hear about one bank failing in the next town. They'd rush to their own bank, demand their money. The bank would pay out what it could. But remember, they only have a fraction of deposits on hand. So they'd have to sell assets, call in loans, liquidate investments, often at huge losses, which would make them look weaker. Would cause more people to withdraw, which would force more asset sales. It's a debt spiral. And once it starts, there's no stopping it. President Roosevelt had to close every bank in America for 4 days. Every single one. He called it a bank holiday. It was martial law for money. And when they reopened, the government announced a new program, Federal Deposit Insurance, the FDIC, a promise that even if your bank failed, your money was safe, up to $2,500 per account, later raised to $5,000, then $10,000, now $250,000, and it worked. The bank runs stopped. Not because banks got safer, not because they started keeping more reserves, but because people believed that the government would cover their losses. Trust was restored. The illusion was saved. But here's the question. Nobody asks, what backs the FDIC? Where does that insurance money come from? The answer should terrify you. The FDIC has about $120 billion in its insurance fund. Sounds like a lot. Until you realize that American banks hold over $18 trillion in deposits. 18 trillion. That means the FDIC can cover roughly 0.6% of deposits. Less than 1%. If even a fraction of banks failed simultaneously, the insurance fund would be gone in hours. So what happens then? The government prints money. They flood the system with currency. They inflate their way out of the crisis, which means your insured deposit might be safe. But the dollars you get back will buy half as much as they did before. You're not protected. You're pacified. And the banks, they learn nothing. In fact, they got bolder because now they had a backstop. Government insurance meant they could take bigger risks, lend more aggressively, keep even smaller reserves. Because if it all went wrong, taxpayers would cover the losses. This is moral hazard, and it's poisoning the entire system. Let me take you to 2008. Lehman Brothers, Bear Stearns. Washington Mutual, Wachovia, IndyMac all gone, and not because of traditional bank runs, because of something worse. A silent run, institutional investors quietly pulling their money, hedge funds refusing to renew overnight loans, corporations moving deposits to safer banks, no lines outside branches, no panic on the news, just billions evaporating in the shadows. And here's the sick part. The big banks knew they were in trouble months before the public did. Internal memos from Bear Stearns in January 2008 show executives discussing liquidity problems. By March, they were begging the Federal Reserve for emergency loans. By June, they were holding crisis meetings every night. And what did they tell their customers? Everything is fine. Your money is safe. We're well capitalized. They lied. Not to protect you, to protect themselves. Because if depositors panicked, if everyone withdrew at once, the bank would collapse immediately. So they had to maintain the illusion. Had to keep people believing their money was there when Bear Stearns finally collapsed. It happened over a weekend. Friday afternoon, the stock was trading at $30 a share. Monday morning, they were sold to JP Morgan for $2 a share. In 3 days, 85 years of banking history, gone. And they walked away with golden parachutes while depositors, while you were told to trust the system. If you're starting to feel sick, if you're starting to question every assumption you've had about where your money actually is, then you need to see what comes next. Hit subscribe, because what I'm about to reveal will change how you think about every dollar in your account forever. Now, let's talk about what's happening right now in your bank today. Silicon Valley Bank. March 2023, 16th largest bank in America, held deposits for thousands of tech startups, over $175 billion in assets, and in less than 48 hours, it was dead. What happened? Simple. The bank had invested heavily in long-term government bonds, safe assets. When interest rates rose, those bonds lost value. The bank was still solvent on paper, but when venture capital firms told their portfolio companies to pull deposits, the withdrawals started $42 billion in a single day. The bank had to sell those bonds at massive losses to raise cash, which made them look weaker, which caused more withdrawals. The death spiral. By Friday morning, regulators seized the bank. By Friday afternoon, panic was spreading to other regional banks. First Republic, Signature Bank, both failed within days. And here's the part that should keep you awake tonight. These weren't bad banks. They weren't running scams. They were doing exactly what fractional reserve banking requires them to do. They were lending out deposits. They were investing in safe assets. They followed every regulation, and they still collapsed because the system itself is fundamentally unstable. The Federal Reserve had to step in again. They created a new emergency lending program, offered to buy those devalued bonds at full price, essentially printing money to paper over the cracks. And it worked. The panic subsided. Deposits stabilized. The news cycle moved on. But the problem didn't go away and metastasized. Right now, according to the FDIC's own data, American banks are sitting on over $600 billion in unrealized losses. $600 billion. Those are bonds and securities that they bought when interest rates were near zero, that are now worth far less because rates have spiked. But because they haven't sold them yet, they don't have to recognize the losses on their balance sheets. It's accounting magic. But the losses are real, and if depositors start withdrawing, if banks are forced to sell those assets, the losses become realized. Capital disappears. The spiral begins. So why hasn't it happened yet? Why aren't we in a full-blown banking crisis right now? Because the government is running the most elaborate confidence game in history. They raised FDIC insurance limits. They promised unlimited backstops for certain accounts. They're letting banks value assets at fantasy prices. They're flooding the system with liquidity, all to maintain the illusion that your money is safe. But illusions crack. And when this one does, it won't be pretty. You want to know how fragile this really is? Let me show you something almost nobody knows. The Federal Reserve has a program called the discount window. It's where banks can borrow money in emergencies. They're supposed to use it when they're temporarily short on cash but otherwise healthy. But here's the thing, banks hate using it. Because if word gets out that a bank needed emergency loans, depositors panic. It's a signal of weakness. So banks avoid it at all costs. Except in March 2023, during the Silicon Valley Bank crisis, discount window borrowing spiked to over $150 billion. $150 billion in a single week. That means banks across America were so desperate for cash that they had to swallow their pride and admit they needed help. And you never heard about it because it wasn't news. Because if it became news, the panic would spread. This is the game. Keep you calm. Keep you trusting. Keep you from asking where your money actually is. But you should be asking, because the answer is everywhere except your bank. Your deposits are in mortgages that won't mature for 30 years. They're in corporate bonds that might default. They're in government securities that are underwater. They're in derivatives so complex that even the bankers who trade them, do you want to fully understand the risk? They're in loans to companies you've never heard of, in countries you've never been to, backed by collateral that's been rehypothecated so many times. Nobody actually knows who owns what anymore. Your money is a ghost, a promise, a number on a screen that exists only because everyone agrees to pretend it exists. And the moment that agreement breaks, the moment trust evaporates, your money disappears. So what do? What does anyone do when they realize the entire system is built on sand? You can't just pull all your money out. Where'd you put it? Under your mattress. That doesn't solve anything. Cash is still just paper, still backed by the same promises, still vulnerable to the same collapse. You could buy gold, physical gold, but try buying 1,000 ounces during a crisis. The premiums will be astronomical. Delivery will take weeks. And good luck storing it safely. Vaults cost money. Security costs money. And if society really collapses, gold won't buy you groceries. It'll buy you a target on your back. You could move to Bitcoin, decentralized, beyond government control. But Bitcoin doesn't pay your mortgage, doesn't cover your insurance. And most importantly, when the financial system crashes, the internet might crash with it. What good is digital currency when the power grid fails? The truth is there's no perfect escape because the system is designed to trap you, to make you dependent, to ensure that your only option is to trust. But trust isn't safety. Trust is compliance. So here's what the banks don't want you to know. The next crisis won't look like 2008. There won't be time for bailouts. There won't be congressional debates. Because the next crisis will be digital. Instant, a few clicks, a few tweets, a few $1 billion moving in seconds. And by the time regulators realize what's happening, it'll be too late. We already saw a preview. Silicon Valley Bank collapsed in 48 hours, faster than any bank in history. Why? Because deposits are digital now. You don't need to stand in line. You don't need to wait for a teller. You just log in, click transfer. And your money is gone. Multiply that by millions of people, all doing it simultaneously. And the entire banking system could implode over a long weekend, and the government can't stop it. They can freeze accounts, they can limit withdrawals, they can declare bank holidays, but those measures only work if people trust that their money will be there when the freeze ends. And if they don't, if people believe the system is finished, then all the emergency powers in the world won't matter. This is the end game the bankers see. This is why they're quietly moving assets, why they're buying land, why they're hedging with gold, why they're building bunkers. Not because they're paranoid, because they're informed and they're not warning you because your panic is their nightmare. Your awareness is their crisis. So they need you asleep, trusting, depositing, spending, working, believing the lie. But you're not asleep anymore. You're starting to see the machinery, the gears turning beneath the surface, the magician's trick revealed. So what do you do with this knowledge? First, you diversify. Not just your investments, your existence. Don't keep all your money in one bank. Don't keep all your faith in one system. Don't bet your future on institutions that are fundamentally insolvent. Second, you build resilience, skills, relationships, real assets, things that hold value when paper burns, because when the system resets, and it will reset, the survivors won't be the ones with the biggest bank accounts. They'll be the ones who can function without banks. Third, you spread the truth, not to cause panic, but to create awareness. Because the only way to change a corrupt system is to make it impossible to hide the corruption. The banks are betting you won't figure this out. They're betting you'll keep trusting, keep depositing, keep believing the money is there. And for most people, that bet will pay off because ignorance is comfortable. Truth is terrifying. But you're not. Most people, you're watching this video, which means you're asking questions, which means you're dangerous to the system, to the lie, to the illusion, and that's exactly what they're afraid of. So let me ask you this. What would you do right now? If you knew your bank was about to fail, would you pull your money out? Would you warn your family, your friends? Would you prepare or would you freeze, hoping it's not true, hoping someone else will fix it? Because that moment might be closer than you think. The warnings are everywhere. Bank failures, unrealized losses, emergency lending, backdoor bailouts. The cracks are showing, and every crisis brings us closer to the big one, the one that doesn't get fixed, the one that resets everything. The question isn't if, it's when, and it's whether you'll be ready if this shattered your perception. If you're looking at your bank account differently now, if you're realizing that security is an illusion sold to keep you compliant, then you need to see what we're exposing next. Subscribe now, turn on notifications, because the next episode reveals the mechanism they're using to transfer wealth from your account to theirs, while you sleep. It's legal, it's hidden, and it's happening right now. The bank run isn't coming. It's already here. They're just doing it slowly, quietly, hoping you won't notice until it's too late. Your money isn't where you think it is. It never was. And the moment millions realize that the illusion ends, are you ready for what comes after?